trading. So now, this night I want to look at RSI, Relative Strength Index, and which is it measures the magnitude of recent price. Now, RSI, when you are saying RSI, it's just Relative Strength Index. It tries to measure the strength of fluctuations. If the thing is, assuming Bitcoin is coming down, RSI will try to measure the speed at which the dip is happening. So if the market fluctuates, it will measure the speed. So sometimes there could be a situation whereby BTC is moving up, but RSI is moving down. It's showing you that the magnitude, that is the force, has decreased, though it has not reflected in the price. So if now you are looking at RSI, and it is a momentum indicator, meaning that it tries to measure the speed of that particular movement, the speed or the force. So that is RSI. Now, in RSI, we have. I'm going to share my screen. Okay, let me just share my screen. Okay, in RSI, we have from 0 to 100. That is numbers from 0 to 100. Now, 50 is the middle line. You know that 50 is the middle between 100 and 0. So now, we have that 50 as the middle point or the neutral point. Now we have 70 as overbought region and then 30 as oversold region. So I'm going to bring out RSI. Normally, we have been doing this thing, other indicators. If you want to add your indicator, down here, after this BTC 4 hours, if you look right, you will see this plus sign or addition sign. When you click on it, you see indicators, and then you search RSI. That is the first one, Relative Strength Index. Now, when you click on it, the thing will add to your chart. So this is the RSI here. You see that we have these numbers here from 0. What you are considering is from 0 to 100. Now, when you put in this thing, you see that there are 3 lines here. The first one, this one here is 70. The middle one is the 50 I was talking about. Then this one down here is 30. So in RSI, this 50 here is the neutral point. It's the neutral point. When it is here, it is like neutral. Now, when it is around this 70, when it is around this upper line here, this one, this is the overbought region. When it is around 30, it's oversold region. So today we are going to be looking at how to use all these things. Now, let us look at important uses of RSI in crypto trading. So, the number one here is buying opportunities at oversold regions. That's when RSI is 30 and below. Now, in any time frame, this thing is in 4 hours now. In any time frame at all, if you want to make use of RSI, whenever it is around this 30, it's telling you that it's overbought from 30 and below. So from 30 and below, it's telling you overbought. And you know when it is overbought, you are supposed to buy instead of selling. So you buy when it is overbought. When you buy around here, whenever you put, even if you don't learn anything tonight, you just learn that if you put your RSI like this, and then whenever it is showing you is around this 30 or below 30 that you are likely to buy. From there, there are so many other things we are going to consider, but the first thing you are going to know is that whenever it is around 30 or below 30, you are likely to buy. That is oversold region. Now, looking at this chart here, this was on Thursday. So if you put your 4-hour chart and you put this RSI here, so you see that whenever you're hitting around this point here, you are likely to buy. Now, when it is at this 50, it's showing you the neutral point. Then if it is around 70 or above 70, you are likely to sell around that region instead of buying there. So it is showing you that it's already overbought. And you know that this market, whenever it goes up, it comes down. It doesn't stay one place. After going up, it will come down. So that's why patience is required in trading. If you are trading and everything looks as if it's pumping, you are supposed to just calm down at that particular time, because it will still, after moving, it will still come down. So that's what this RSI is all about. Now, if it's around this 70, do this thing, you are supposed to sell. So, number one, we saw that buying opportunities at oversold region. That's one important use of this RSI. Then number two is selling oversold region from 70 and above. In fact, if you see it, sometimes it can go above 70, but it's not every time. So you see here, it went above 70. Whenever you see RSI above 70, at that particular time, you are meant to sell. So most times, so there are so many other things we are going to consider this night, but this is the first thing that you are supposed to learn. Then number three, buying opportunity in a bullish trend when the RSI is 50, is above 50 and below 70. So if we are in a bullish trend like this now, here is 50, this place is 50. Then if this thing, you are seeing that we are in a bullish trend. For example, here we are in a bullish trend. So if you see it above 50 and you see that the trend is very strong, you know that it's likely going to hit around 70. Anytime it is above 50 and you are seeing a bullish trend, and maybe you have considered other things in your chart and other indicators, that is showing you that you are supposed to do this thing. You can enter a long position when it is above 50 and then it's going towards 70. So you can enter a long position at that time. But if it's hitting around 70 already, you are supposed to sell. So 70 is the oversold region. But anything from 50 and above is showing you that we are in a bullish trend. So anytime you see your RSI, for example, look at what I'm saying here, because I might just be talking like this and some people will not understand. Right now, we are in 4-hour chart BTC, where we are now is 47, meaning that it's showing us that we are in a bearish trend right now because we are below 50. So that's what I mean when I'm explaining this thing. See here, we are 47 right now. So showing us that we are in a bearish trend in 4 hours right now, according to this RSI. So I told you that so many other things that we consider, and we're also going to look at the limitations of RSI. Now, so that's the number three, buying opportunity in a bullish trend. A bullish trend. For example, when we were here, maybe from 51 up, so you can enter a long position around this time and then around this area, and then you can sell here. Okay, we hit 60. This was 55 before the thing started coming down. Now, the fourth one is selling opportunity in a bearish trend. For example, this thing now, I said that looking at this RSI, we are around 47, showing us that this trend is about to in a bearish trend right now. So this is selling opportunity in a bearish trend. That is when RSI is below 50 and above 30. So right now it is below 50, but is above 30. So it's possible that this trend can, okay, look at what I'm saying. It's possible that we can get this thing here. That this thing can go like this. So that's what I'm saying. Like this number three, number four, I'm explaining now. Selling opportunity in a bearish trend. Whenever it is below 50, but is above that. Now look at it. So you can enter a short position and say that the thing is below 50, but is yet to hit around this 30 region. So you can enter a short position and then sell around the fourth one here. Now the fifth one is buying opportunity in a bullish reversal. When there is a bullish divergence in your chart, that's when there is bullish divergence in your chart, you can enter a bullish, you can enter a long position. I'm going to show you what I mean by that divergence later. Now, if this one is selling in a bearish reversal, that is when there is a bearish divergence. Now, let us look at that divergence I was talking about. RSI divergence occurs when there is the price of a crypto is hitting a new high or a new low, but the RSI itself is not making a new low or a new high. For example, you see that if BTC is going up like this, RSI tends to follow the same pattern. See, if we consider the chart from around here, you see that BTC was going up here. If you consider from here, there was a bullish trend here in 4 hours. So you can say that you see that this thing was going up. So RSI itself was going up. So it seems as if every time that BTC is going up, if the price is going up, then RSI tends to follow the same pattern. But divergence occurs when this one, maybe this thing, the price is going up, but RSI is not going up, or RSI is even going down. That is what is called divergence. Or the price is going down. You see that this place was up. Everything was going up. Let's say from around this place, you see everything was up. You see this arrow, and then this arrow here, the RSI. Now, if the price reverses, for example, what happens from here now? You see this arrow here. From here down, the price reverses from around that area. Now, look at what RSI did. RSI started coming down. Now, the divergence occurs when they don't agree with each other. When the other one is going up and the other one is coming down. Instead of, you have seen that this is what happens in the chart. If the other one is going up, the other one is going up too. If the other one is coming down, for example, if you just feel this like this, you see that it's as if immediately BTC started reversing. Use the 4 hours time frame, that RSI started reversing too. And then when it was going up, the other one was up. But the divergence occurs when this one is going up and this one is going down instead. So in these two places, two of them agree. But we are going to see other things here. Now look at this place. So this place we had bearish. I don't know if you are getting, please, if you are getting me, let me know. Now look at this place. This thing was coming down here. The trend here was bearish in the chart. But look at that RSI here. Look at that RSI. But RSI was going up instead. That is divergence. See where I'm going to do this. Just watch this chart. I don't know if you are getting this. See what happened here. Look at this. If you feel this thing, check this line from up here, from here to this RSI side. Now check it. You see that from this trend here, the trend was down. It was a downtrend in the chart. But when you check the trend in the RSI, it was an uptrend. This is a divergence. And in this case, it's a bullish divergence. So that's what I was trying to say. You see, like the normal thing that happens in RSI is that it follows the pattern. If BTC is going up, it will start going up. Look at where I started here.